Good morning. Welcome to Stock Market Today. It's Friday, February 7th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you a daily stock ideas to consider. They hit your inbox every trading day before the market opens. So U.S. equities finished mostly higher on Thursday, with the S&P 500 and the NASDAQ closing at new record highs for the second consecutive session. Comm services, tech, and REITs were the best performers. Energy and financials lagged. Treasuries were mixed. The dollar was stronger against the yen and the euro. Gold tacked on 50 basis points, and WTI crude added 40 basis points to start the day. As we get to the desk this morning, S&P futures were under a little bit of pressure ahead of that jobs report, which actually came out and beat expectations, lending a bid to the S&P 500 futures. Asian markets were mostly lower overnight, though China finished higher. European markets were lower this morning. Treasuries are seeing strong gains across the curve. The dollar is stronger versus the euro, but weaker on the yen cross. Gold up 10 basis points. WTI crude down 40 basis points to get us going on a Friday morning. 4-day rally ahead of that jobs report. And the futures look to be rebounding a bit here this morning. Support remains in that range between 3,200 and 3,250, and that range has served us well. The pullback held within that range. The RSI stayed in bullish ranges, and we've subsequently rallied over the past 4 trading days. We are at new highs, so we're looking for a new resistance level to form. The RSI remains in bullish ranges. There is that divergence at play, right? We talked about it yesterday. You're going to read about it if you follow anybody who's really technical in the marketplace, myself included. What we have here is a new high for the S&P 500, but not a new high for the RSI. The speed of this advance, right? We've advanced sharply over 4 days, and this is a 14-day look back, right? So there needs to be a little bit of catch up, but there is a bearish divergence or a negative divergence on the chart. That's when the market or the stock that you're following makes a new high, but your indicator does not. That's known as a bearish divergence. Is it a sell signal? No. Do you want to pay attention to it? Absolutely. What do we like to do? How do we pay attention to it? Well, the same way we pay attention to everything in the marketplace, we manage our risk. Chaikin money flow is still bullish. So, for all intents and purposes, the indicators are lining up with the trend in prices. Continue to focus on bullish and very bullish stocks in leading areas of the market. Try to get those stocks when they are oversold with bullish money flow. Taking a look at our market in a minute now. What are we writing about today in our note to Chaikin Analytics clients? Well, new highs for equities as the rally extends for the 4th day. We've touched on that already. Key metrics remain more risk averse than risk seeking, and that's kind of interesting to me. Every Friday, I look through key relationships and metrics in the marketplace, right? I look at, how our high yields trading relative to treasuries. I look at small caps relative to large caps, right? We'll look at consumer discretionary against consumer staples as well as semis, right? Different relationships to give me a sense, are investors risk averse or are they risk seeking? And that could help explain some of the moves that we see under the surface within the marketplace. All eyes were on that January non-farm payrolls report, which came in better than expected. Healthcare services, I think there's an opportunity there in futures. As of this recording, pointed to a lower open here today, but they are rebounding from the lows. Taking a look at the major indices from a power bar perspective, the Dow tacked on 30 basis points yesterday, 8 to 6 bulls to bears. S&P 500 a like amount to the upside, 146 to 65 bulls to bears there. NASDAQ was an outperformer, up 86 basis points, 38 to 4 bulls to bears. If you're looking at the NASDAQ, small caps down on the day, underperformer. Really starting to see the intensity of underperformance on small caps pick up. 524 to 257 bulls to bears. Bonds uptick, sending yields lower. Comm services, one of the leading sectors yesterday. It's really one of the sectors that we've started to warm to. 7 bullish or very bullish stocks for only 2 bearish or very bearish stocks within the communication services sector of the market. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board are mixed. Taking a look now at our stock of the day. And this is actually the stock that I'm featuring today in my note for Chaikin Analytics clients, and it's United Healthcare. UNH is the ticker symbol there. Now, it was down 1.1% yesterday, underperforming the market, but the power gauge rating for UNH is very bullish due to a very strong earnings performance, very positive expert activity, as well as attractive financial metrics. So when we take the 20 factors, 5 in each of these 4 categories, we come out with that very bullish rating. Stocks in a strong trend above a rising long-term trend line. Stocks in a strong industry group, the healthcare providers, right? Remember earlier this week we looked at healthcare services as an industry in focus. But what I see here is a very bullish stock outperforming the market with bullish money flow that has become oversold. Now our overbought, oversold indicator is rounding higher within that oversold position, which to me sets up an opportunity on the long side. I think this is a compelling name, which is why I'm featuring it as my stock of the day in my note to Chaikin clients today. What I see is a nice uptrend, go into a consolidation, holding support at the rising trend line, likely to resume to the upside based on that power gauge rating, based on the relative strength. So, for those looking for ideas in the marketplace, I think you should take a look at United Healthcare, UNH. Our sector tracker now, movement of the major sectors over the last 5 days. Materials at the top of the list, and this to me looks like a counter trend rally. This is a bearish group here at Chaikin Analytics. If we look at the XLV, it has a bearish ETF power gauge rating, and it has more bearish stocks as holdings than it does bullish stocks. So potential maybe an opportunity to look for names to the downside in materials. Discretionary, holding near the top of the list. Healthcare, one of the areas of the market that we've been focused on lately. Now, I do think that there's going to be volatility around healthcare and within the healthcare sector as we go through the election cycle. But for now, healthcare looks like a compelling group based on our work. What is our work? Well, we look at the power gauge ETF rating for XLV, as well as the underlying holdings, look at the relative strength, and we continue to like healthcare. Obviously, tech has been and remains one of our favorite areas of the market as well. Middle of the road over the past 5 days, comms, industrials, financials, and staples, all higher. Real estate is higher. Utilities and energy are the only groups that are lower over the last 5 days. Now, we've seen a bit of a counter trend rally in energy. I'm still not there yet. Energy continues to be an area of the market that we want to avoid. I get a ton of questions over the past week from our clients. It was now the time to start looking at energy, and I just don't think it is, right? The group remains very bearish, more bearish stocks than bullish stocks. Just don't want any part of it for right now. I'd rather wait for a sustainable base to form and then reevaluate the situation. Let's hit our industry in focus now. Home builder services, which over the past 6 months has been an outperformer, leading the S&P 500 by nearly 4%. And its power bar ratio, which looks at future potential, is very strong. 14 bullish or very bullish stocks for only 4 bearish or very bearish stocks. It's currently ranked number 8 of 21 subsectors, down one slot over the past week. So some of the indicative names there that might make some sense to look at. Well, you should recognize the first one, TMHC. It was actually the stock that we looked at yesterday. Has a bullish, very bullish rating for Taylor Morrison. DR Horton, DHI, very bullish ratings, and MDC Holdings, ticker symbol MDC. They made that one easy for you. Also with a very bullish Chaikin power gauge rating. So 14 stocks to look at here. Group is kind of interesting to me. Very bullish Chaikin power gauge ETF rating for XHB, strong trend above that rising long-term trend line. Relative strength, though, has been a bit mixed of late, right? After being a strong outperformer throughout much of 2019, we've started to see the relative strength diminish. What does that mean? We're in an uptrend, right? You can clearly see this is an uptrend. But the builders in the near term have just been going up less than the overall market, right? S&P 500 or the SPY is at an all-time high. We're not there yet for XHB. It's still an interesting group, but I think that you need to be a little bit selective, really wait for premium and quality setups within that group. There are 14 bullish or very bullish names that you can drill down on and look for opportunities, but I do think you need to be selective there. The fund itself is oversold, and the indicator is beginning to round higher within the context of that oversold position. Taking a look at what's trending now. Yesterday's S&P 500 gainers and losers are movers and shakers on the day. Twitter up 15% following their earnings report. Nice rally there back to the level from which it broke down. We'll note that it caught one upgrade today and one downgrade. Cardinal Health EPS sends the stock higher. Their earnings report sent the stock higher by 10.5%. Stock did catch an upgrade here today. Cognizant CTSH higher following their earnings report, up nearly 10% on the day. FMC, didn't see any real news there to drive trading in that name, but up nearly 6%. It is a neutral rated stock. Take Two rallied yesterday by nearly 6%, 5.75% ahead of their earnings report, which came out after the close. but the stock is subsequently trading lower in the pre-market this morning. On the loser side of the board, BDX, their earnings and their guidance sent that stock lower by nearly 12%. Kellogg, earnings down 8.5%. Capri, giving back some of the pop that they witnessed after their earnings announcement the previous day, down nearly 6%. Tyson down following their print, 5.16%. And XYL, their earnings and their guidance disappointed. So investors took a little over 5% out of that stock. Let's take a look at what we're writing about today. I said we're talking about key themes and relationships and what it says about the environment, right? Are investors risk seeking or are they risk averse, right? A lot of the relationships that I look at help us come to that conclusion. And one of the main ones that I like to look at is consumer discretionary stocks relative to consumer staple stocks. And we do this on an equally weighted basis to account for the fact that Amazon is a really large weight within the consumer discretionary sector. So we want to kind of even out and adjust for that. And if we think about it, consumer discretionary companies sell products we want. And consumer staples companies sell the products that we need, right? So if we think about how investors are feeling, about the growth picture and about the current environment, when they are willing to bid up discretionary stocks relative to staples, that means they're feeling pretty good about the growth outlook, in my opinion, right? But for much of 2019, we were hearing about global growth concerns, and you can see discretionary lagged staples, right? The more defensive group has been outperforming. And even with the rally that we've had over the past 4 days, the group remains below a declining 200-day moving average, below this trend line. Now we're testing some near-term support here, but I just kind of find it interesting that with the sharp rally that we've seen in the market this week, discretionary is not getting more upside traction relative to staples, right? So it's just kind of a picture of the environment. And what I think is when you hear stories or if somebody's trying to tell you that there's excessive exuberance in the market when the market's at all-time highs, it's some kind of bubble, I would point to a data point like this and say I don't necessarily see the excessive risk taking that you're talking about, right? And you can see it in a few of the other data points, right? Whether you look at high yield bonds relative to treasuries via the HYG and IEF ETFs, right? We're not seeing the kinds of excessive risk taking that some of the headlines would have you believe, right? Semiconductors, we focus here. You know it. We talk about it a lot. And we've been in a consolidation for the past few weeks when we look at semis, SMH, relative to the S&P 500, right? Steady rally with the market. I would argue that it leads the market. And now we've gone into a bit of a consolidation. So I think we need to watch this consolidation closely as a clue for the likely path of the market going forward, right? This ratio tends to bottom and top ahead of the market. So if this is a top, and we see a breakdown through these support levels, we'd start to become concerned about the uptrend in the equity market. If it's simply a consolidation that resolves itself to the upside, we remain obviously bullish. Now, we remain bullish with our view on equities as support has held here. The ratio is above rising 200-day moving average. And even on the pullbacks, the RSI has held in bullish ranges. So a little bit of a divergence. But for now, we're going to defer to the trend and the way the evidence supports semis continuing to outperform the broader market. And if you're just looking at the semiconductors on an absolute basis, just a nice steady uptrend, trading up here near their recent highs. So continue to take you clues or cues on the market from this relationship. It's something that I watch very closely, something that I keep an eye on every day. I write about it often. I talk about it here. I do think it's that important. Finally, I think there's an opportunity in healthcare services. This is, I've said we've been warming up and been bullish on healthcare. And if we dig under the surface, one of the groups that we like is healthcare services. Take a look at XHS, the ETF that tracks that group. We have a breakout support holding, 50-day moving average holding as support, trading above the rising 200-day moving average. We've seen a series of higher lows for the RSI, actually becoming overbought a few times recently. It tells us that there's momentum behind this trend. I see a consolidation here that's likely to resolve to the upside. On a relative basis, we've broken the downtrend line. If we look at the ETF itself, it has a bullish ETF power gauge rating, 20 bullish stocks for only 5 bearish stocks. So the stock of the day that I'm highlighting today, UNH, comes out of this group. That'll wrap us for today. Have a great weekend, everybody. Check out shakenanalytics.com/test drive to sign up for a free trial.